Hey, everybody, welcome to another episode of the Everyday Trader. This is Greg Jensen. Good to be with you once again. It's been a few days, so it's good to be back. Talk about the markets today, talk about a few things going on together with my friend and partner, Eric Hale.
What's happening, Mr. Jensen?
It's another beautiful day in paradise. This is
Is
the
it?
time of year when I love to live where I live. So yeah, no,
What,
love the Rocky Mountains.
getting any good fishing in?
I did go fishing. I did. And it was just okay. It was just okay. Well, maybe
What
it'll
do they
be.
say about a bad day of fishing?
That's right. Bad day
What are
of
the,
fishing is a better day than a good day at church.
you
Oh,
know
I
what?
mean work.
Work. You know what? David Kotok told me is that God only gives you so many days to live on earth, but he doesn't count the days you fish.
Ah, I like that one. I
Yeah.
like that one. I'm gonna use that one with my wife.
Yeah. So that's why a big reason why he likes to fish. So, he's an avid fisherman, but
Yes,
I like that
yes.
one.
Well, the markets have been continuing to kind of grind through the summer, the last couple of weeks to start off June. But that's hasn't been for the lack of some activity. We actually have had some big moves to the upside on a handful of stocks, and big moves to the downside, and a few tradable types of events. One of the things that I have tried to do over the years of trading, and some of my biggest individual trades have been surrounding events in a company, not necessarily events like FOMC moves, although those can provide opportunities to trade sometimes. But most of the time, the Fed moves are priced in to the market. But I think there's actually a way to trade individual stock names around different types of events, and specifically two events that I know, Eric, you and I talked about. We wanted to talk about trading today, or trading around earnings events, and then trading around stock splits. Stock splits are back in the game again. The stock splits went away for a long time. I think mostly because of what happened with the markets in COVID, but you could even arguably go way back to the financial crisis of 2009. I mean, I remember the internet bubble days. Stock splits were an everyday occurrence, and everybody traded stock splits. And every company was out there was trying to split their stock and see if they could take advantage of the momentum of a stock split. And then the financial crisis happened, and a lot of people panicked and lost trust in Wall Street, and the market grinded higher for the most part. But a lot of companies actually were allowing their stocks to just go the way of Berkshire Hathaway and just become real. Not that any of them have gotten as expensive as Berkshire Hathaway shares, by the way. Do you think? But Buffett said he will never split his shares, right?
Well,
At least the A shares.
well, that's the reason why they have B shares. So, and
Yeah.
if you have A shares, you can convert them to B shares. And he's said that there's no reason to split A when people have an avenue to be able to trade the equity with different price points. But yeah, it doesn't, the slice of the pie is the slice of the pie. It really doesn't matter when you talk about stock splits. That if you slice the pie, and there's this joke about as a meme I saw of a guy whose girlfriend asked to have the pizza place cut the pizza in 6 slices instead of 8 slices because she wasn't that hungry. Like it's still the same pizza, right? So 6 slices, and he couldn't convince her that 6 slices and 8 slices are still. It's just 6 slices are bigger. So when you look at Chipotle today, 50-1 split. Nice to see Chipotle down here. What it does do is makes it more attainable for retail traders. We had the Nvidia split that happened just like 2 or 3 weeks ago on the 7th of June, and the stock has gone up significantly since that move. And I think in large part it is because I'm certainly hearing from our clients that they're happy. Karen shared a trade example on Nvidia, and some of the comments that I saw from people like, "Oh, I'm glad I can finally trade Nvidia because it's at a price point." And so retail traders can definitely be contributing to any movement in the stock. We also see it in other ways. Is we see the implied volatility tends to go up prior to these sort of events. And when you trade options, options make money for really. There's five things that change the price of an option, and stock price is just one of them. Time is the other, and implied volatility. Risk-free interest rate and dividends also impact them, but we don't really trade those. Those are difficult to make money off of. But when you see implied volatility, I think people really need to get in tune to what implied volatility is. It almost sounds too good to be true when somebody finally understands implied volatility. Greg, when I finally learned implied volatility when I was a student way back when, my attitude was that, if this is as good as important as it seems or as these guys are telling me it is, everybody would be talking about it. I would already know about this. And I'm just blown away at the number of people who look over one of quite possibly the most important, most reliable indicators of stock movement. Now, it's not bullish or bearish. I have a crystal ball on my desk I bought from Amazon specifically to talk about implied volatility, and that it gives you the ability to forecast moves. And where it comes from is essentially the price of options. When options are expensive, somebody told me over the weekend that one of the things that I've said resonates with them, and they say it all the time, and that is when the price of insurance is high, it's high for a reason, right? So when you see puts being expensive, the wrong reaction is to say those are too expensive, because it's like having and I use the example of my kid when he turned 16 and his insurance price was way more, like more than twice the price of my wife. And you have teenagers, and boys are expensive to insure on your car insurance. And because the insurance is expensive, that's the reason you need to know, you need the insurance. So we see this with option prices, but it affects calls and puts equally. So both calls and puts, because you can be bullish on both sides of the equation. If a call price goes up, you can just go buy a put and stock, and it's essentially the same trade. Of course, one has more capital than the other, and carry costs matter, but we see implied volatility go up, and that's certainly tradable. And I think that's what we've seen. I was looking at Nvidia prior to the Nvidia split. A lot of people were trying to trade options, and we saw a big move up in implied volatility. And then after the move, it dropped down. So you and I were talking ahead of time about, how do you trade a company like Nvidia, or maybe even now we've got Chipotle Market Grill, which split 50 for one this morning. And I think I love it, because now it's something definitely that I can trade, as opposed to it being, what was it, like 60, or it was like 3,500.
$3,500. Yeah.
It was like 3,500 before. So it's a big chunk if you're trading 100 lots shares.
Yeah, and I think that's, you bring up a good point there, and that it shouldn't matter because it's the same pizza sliced into just more slices now. But because of that drop in price, and because it's now accessible to those people who are using options specifically, who are like, because to do a covered call, I have to buy 100 shares. And at $3,500 per share to do that, I got to have 350 grand. Just to do 100 shares of Chipotle, whereas now I only have to have 6,500. 50 times less. A lot of people don't have $350,000 in their portfolio that they're willing to put into one position, right? Into Chipotle. And so it was virtually an untradeable asset for option traders who are using covered calls and collar trades. And now it is. Now it's in range. And so it does create patterns that I've noticed, though. And it doesn't always hold true, but we've got a couple of examples that will be interesting to watch. And Nvidia kind of held the pattern that normally happens, is you see this anticipation run in anticipation of the split. And then like the day or two of the split, there's a little bit of a pullback. And notice like those two little red candles right at the beginning of June, you might have to zoom in a little bit. And then after the split, it took off and rallied up to 145. because all of a sudden there was the ability for retail traders to get into it. Now, that euphoria then came back out because, in my opinion, at least I haven't seen any newsworthy changes that have come from Nvidia, any fundamental announcements in the last 30 days to warrant either the run up that happened after the split or that, $20 pullback that we had just last week. I think most of that has all just been driven due to order flow and money moving into Nvidia on the excitement of the split. Then after the rally, people saying, okay, I'm going to take some profits. And to be honest, this pullback that Nvidia's had the last week or so, historically, if you're looking at stock splits and their performance, actually is the opportunity to get bullish in Nvidia, is this pullback that's happened right here. Because now people are like, okay, Nvidia's had some profit taking, still in a buyable range for me. And I expect a similar thing could happen to Chipotle over the next week or so. We could see, now that Chipotle is an affordable stock, we could see it take off because retailers are all of a sudden, okay, I'm going to jump in and buy Chipotle again. I can go spend money on Chipotle and have it not have me gain weight, right? They're putting a Chipotle in like right down from my house right now. Yeah.
It's good stuff. Guacamole's extra though. I don't know if you know that. So.
Yeah, I'll make my own guacamole.
Do you?
I
Nice.
do actually. I make a killer guac. Anyway, maybe I'll bring some up when I see you in Jackson next week.
Ooh. You know what you need to bring when we go to Jackson Hole? Is the bread.
I do need to bring you some bread.
I
You
want the jalapeno cheddar bread.
I was just gonna say, do you want the
From
jalapeno?
Teton Sourdough. This episode brought to you by
Bread.
Sourdough Bakery.
My wife, I think I've said that before on here. My wife has a gift. Yes, we opened a bakery together. It's been a fun adventure that her and I have done together over the last year or so. But
I've been doing on keeping the weight off because, like, at the end of the day, you got all the stuff left over. She makes some really good looking stuff, man. I like those cinnamon rolls. Ooh,
oh yeah,
some
those
of
are the
those
things I have
cookies.
to stay away from. To be honest, the sourdough bread itself is actually good for you.
Right. Oh, as far as breads go,
As far as
definitely
breads
a
go, it
good
is, yeah,
choice.
it's lower glycemic. There's actually been studies that have shown that if you will eat sourdough bread with a meal, that'll actually lower the glycemic load for the entire meal,
Interesting.
not just the bread itself. So it has to do with the natural bacteria that's there in the bread. But anyway, we were doing a show about bread.
We should do an episode about bread.
We should. We could bring her on. That she would never come on.
She would never come
I
on.
can already tell you, my wife will never come on my YouTube channel.
She'd
Not.
have YouTube. I know she didn't even want to see the press when you guys had the newspaper out at the place.
Yeah, she's a very
Um,
private person, my wife,
well,
which I love about her. So
well,
anyway, we were talking about stock splits, and again, I think Chipotle has the potential to perform similarly to Nvidia. So I think this might be an interesting potential trade to look at a bullish move over the next couple of weeks. Then probably followed by some profit taking, which will then create another long-term bullish opportunity. There's another big stock, another big tech name that's got a stock split coming up still in a couple weeks too. That could have, again, following the similar pattern, have some, and that is Broadcom, right?
mhm. 50 for
ABGO.
one. Is it? No, it's not a 54. I think is it a 20 for one?
I think there's a 20 for one. I think you're right.
Yeah.
I think it's a 20 for one on Broadcom. Now you've
So
got.
I've been looking at potentially putting a trade on. I trying to look at the calendar trades.
It's a 10 for one. It's a 10 for one, by
Oh,
the way.
okay, 10 for one on
Yep.
Broadcom. So yeah, this is the next one. I was actually looking at Chipotle today and structuring a trade, and I just didn't have time to pull it off. But I see, what maybe can be considered a level of resistance here, and the PE ratio is not 1.4. It's just the PE ratio hasn't adjusted. I think PA is, if I'm not mistaken, is around 69. I like the idea of my Costanza trade. That's, you're right. If you're wrong, you're right. So either way, you're right. The problem is if it goes up and you adjust for the bullish trend and then it turns around and goes down, but you should already know how to trade covered calls or caller trades in order to adjust that. But looking at the premiums, trying to do a trade when the implied volatility is high and doing a Vega negative trade. So as the volatility drops down, that makes money for you. Theta positive trade makes money with time. And if the stock is stagnant, you make money because it's a stagnant to bearish trade. But if it goes in the money, it starts to move up. If you purchase at the right price, you've got an explosively bullish trade that does very well if it continues to go higher. There's always the question, and then what, and then what, and then what, and you need to have the answers to that. But you and I talked to you ahead of time, and you just said a bullish trade. I would do a like what I call the Costanza, which is a bear call out of the money, short call, and a higher long call. What trade would you do if you're bullish? What would you do? I heard you
Well, it depends
told me,
on
but
the
now
entry
you're gonna
point.
change it.
I actually think you're right on the Costanza trade right here, because I think that's a one that you and I both know that it works great if you're right, if it goes stagnant to bearish, but it's easy to adjust if you're wrong, and turn it into a bullish winner, by just buying shares.
Oh, well, let's bring up when was the last time you did that, Greg?
Um,
Didn't you do that on Apple right here?
I did
And you
actually.
adjusted it to that explosively bullish trade right here.
I had a
And
really
it
good trade on Apple
freaking
a couple weeks
crushed
ago.
it. Tore the cover off the ball on that one.
Yeah, in fact, I was even a little more aggressive on my bullish adjustment than you normally do, because a lot of times you just buy the shares as the adjustment, and then you have the long call that was part of your bear call, and then you've been a covered call. But I actually not only added shares, I bought an additional set of long calls too, and
Nice.
leveraged it. So yeah, that was a good trade. My best trade of the year, to be honest,
Love those.
so far.
Love those. So my best trade of
And
the year
it,
by far has been Tesla. And
yeah,
I've got
you've got a good trade going on right now, right?
yeah, I've got a fantastic trade going on. I've got 3 or 4 trades actually going on, and they're stagnant to bullish and shares. So I think Tesla is not being given full credit for its energy business. So Tesla does make solar. I have a Tesla solar roof, the one that looks like shingles. People try to do the math on it, but if you went to go like, is it cheaper than an asphalt roof? No, it's about twice the price of an asphalt roof, but it looks like a roof. It looks like a slate roof. I mean, it looks like tiles, and it generates electricity, and it comes with a 25-year warranty for leakage and everything in production. So it's a hell of a good deal if you do the math. I'm surprised it's not getting more traction, but the really interesting side of Tesla is the energy storage space. And we're seeing a lot of action in the solar area, and like First Solar and Enphase, you're seeing a bunch of stuff going on there. The Adam Jonas from Morgan Stanley came out with a report on Tesla this week saying that, just like Apple has this services business that commands a higher rate, this energy storage business that Tesla has is phenomenal. A lot of people don't realize that the price of electricity varies throughout the day, and at some points, electricity is actually free or negative. Wholesale providers can get paid to take electricity, which is why things like pumped storage, if you've ever seen this, is very archaic. They take water and they pump it uphill to a reservoir when electricity is cheap or free, or they get paid to take it. And then at night, they turn on a turbine and open the valve and let the water flow through. Very inefficient from a thermodynamic standpoint, but economically it makes a ton of sense because they can get paid actually to take the electricity. So similar thing with battery storage, because you don't have the ability, you don't have the scale to build those reservoirs everywhere, but you can put a Tesla, any place you can put a tractor trailer, you can put a Tesla battery pack in, and then there are people that are out there doing this, investing in these as merchant opportunities because they can buy these battery storage facilities. And Tesla has a compelling competitive advantage in the production of their battery cells. They make some of the best batteries, and that business is, there's all these secondary knock-on effects to the whole AI thing, which I don't think we're anywhere near done the AI space. I think there's lots of room to grow, and everybody's talking about Nvidia, which I think still has a lot more room to grow. I think Nvidia can continue to go. But Tesla also, first of all, the entire self-driving is all AI. They have this Dojo facility, which is one of the biggest computers in the world that's doing AI work. And I think there's a lot of stuff that's happening in Tesla beyond just the cars that people don't understand that. And I think people are just starting to catch wind of it and see an interesting pattern here with the base being established in Tesla. And I'm still very bullish on Tesla from here.
Well, I think you're bringing home a point that there are opportunities to trade even amongst a market that might be churning sideways. And it's sometimes events, and then there's specific things like Tesla and their focus on energy. Apple's example actually wasn't a stock split. It wasn't an earnings event. It was their annual Worldwide Developers Conference that they held, where they released their focus on AI. In fact, Apple got an upgrade again today. Got their price target raised, I want to say, to like 250 by Rosenblatt, 260, based on the idea that Apple's going to focus more on AI. And those types of events are tradable events. And oftentimes there are patterns related with them. The harder ones that are to trade, in my opinion, at least to pick direction, are earnings events. Earnings events you get more often. Every quarter you're going to get an earnings event. Stock splits happen once every 10 years type of thing, or maybe more often than that, but usually it's not very often you get a stock split. Earnings events you get every quarter. Now, earnings events are also much harder to predict, I believe. And there's a lot of research, a lot of analyst firms on Wall Street that spend millions and millions of dollars on researchers to try to predict what those earnings are going to be before they come out. Now, I still believe they're not always the greatest at predicting what's going to happen, especially how the market's going to react is maybe the better comment. But that doesn't mean they're not tradable events either. A couple of those earnings events recently, FedEx had earnings today, this morning, or maybe it was after the close yesterday, but the market's reaction was first today.
Huge.
And the stock was up huge. They were up 15% today, up almost $40 a share, because they beat on their fourth quarter earnings and they raised their guidance. That's a tradable type of event. We've got another one going on right now while we're talking. Now we haven't got the conference call yet. Although, when does the conference call start? Probably. It's currently 2:36 Mountain Time, 4:36 Eastern Time. My guess is the conference call starts in about 20 minutes. Here with Micron is, by the way, it's the company that's just announced earnings after the close today.
It's down almost $10, so
Yeah,
about
and Micron's down
7%.
like 7%. So these are harder ones to predict. And a lot of times it's also what the stock does in anticipation of the earnings event. In fairness, Micron, in the last quarter, their last time they announced earnings, the company was a $90 stock. And they've recently gone to, what did they peak out just a few days ago? 153, just a few days ago on June 18th. And, for them to pull back to 132 or so in after hours, yeah, they're down about $30 from their high, or about 20% almost.
Yeah.
Am I doing the math right? $20? No, a little over 10%, like 12.5% from their highs. But that's still up, almost 50% from where they were just the last time they announced earnings, a
That's
quarter ago.
so one of the things that we know that happens around earnings events is implied volatility, and the implied volatility for Micron here was at 67, which is a 52-week high. That's insanely hot. There's nothing in the technical signals, there's no moving average or Bollinger Bands or MACD or anything else that would give you insight into this. And this is a forecast of volatility in the future. So the fact that it made this sort of move isn't a surprise. And there's a lot of equities that fall into this sort of predictable pattern, where the volatility, oh, that's Micron. I was going to type in Foot
Oh,
Locker.
are you sharing your screen? I'm not seeing it.
Oh, no wonder. So
There we go.
Micron here, if we look at the implied volatility, it's up to 67%. I mean, it's like insanely high. I mean, what's normal for him? I mean, even somewhere around 40 or 50 is normal for pre-earnings, and even 58 was high, but we were at 67. So it was telling you full on that that sort of move would have happened. Like, here's an example of Foot Locker. You see this pattern here, this blue line going up 4 times a year, and it tends to coincide when the stock makes big moves. And that's implied volatility is the price of options. So we tend to see prior to an earnings event, when the market expects a huge move to happen, options become very expensive. And as far as approaching it, how do do you pick a direction? And there's really two schools of thought, I think, when you think about recognizing that this is going to happen. One school of thought is to take advantage of the rise of implied volatility that happens before the earnings event. And there are strategies. You want to be looking at the Vega positive trades that make money with the rise in implied volatility, because it's very predictable that it's going to happen. And then you're going to have a volatility crush afterwards. And it's difficult to have Vega negative trades that don't also have big risk with them, upside risk or downside risk, in the direction. There's no real, it's hard to do a stagnant trade. You could do an iron condor, but it has to be so wide that your risk is just unacceptable. So rather than picking a direction, I think, especially if you own the shares, the collar trade is actually a trade that can work and make money in either direction. Like, you can literally make money if the stock goes, you own the shares and it goes down, or if it goes up. And that structure of a collar trade is, your sort of go-to vanilla collar trade with a 3 to 6 month short call and a 45-day long put. And if you model one of those up and take a look at it, it almost looks like a straddle. A straddle is a long call and a long put. That makes money if the stock goes up or down. So you can take a collar trade and make something that looks like, or like you like to do, a calendar straddle or a calendar strangle with different. You have one of those going on right now on
Micron.
Micron. Oh yeah.
I do.
So you're probably going to be doing great on Micron, because as long as it goes up or down, you're going to make money. So yeah, I forgot about that. So Micron's probably going to do well for you. And you did share that with the Trader Oasis community. So.
I did. I would have rather had to go up than down, but you're right. I guess it would have been easier for me to adjust it if it went bullish than it is if it needs an adjustment with the bearish move. But who knows, if I get a big enough swing to the downside tomorrow, I may make enough money with my short-term long put that
Yeah.
I may
Well,
have a free shot back in the other direction that's got a long time left with it and turn it into a calendar trade. And there's all kinds of things you can do with it. So
short-term options are very high gamma. So when they go in the money, their delta changes very quickly, and they become very, very powerful. They give you a lot of power. There's pros and cons for every sort of option structure you can make, and being able to understand what are you trying to leverage. It's not that difficult, but it is more difficult than just saying stock go up or stock go down, because we have to think about time and volatility changes as well. But once you break it down and look at it from a simple standpoint, it's pretty straightforward. So that should be good. So I was going to talk about one other thing, and we were talking about the AI space, and certainly Micron is a play on AI, because every place that there's an Nvidia chip, there's probably Micron chips as well. Another one, Bank of America, and I shared this in our institutional insights research, published a really in-depth report on diving a little bit deeper, sort of this next tier of artificial intelligence. I mentioned Tesla as being one. Certainly the energy companies, if you take a look at all of the utilities, just you can look at a chart of XLU, which is all the utilities, a big part of the ramp up that's happened. This is usually quite a snoozer, but some of these companies like NextEra and Constellation are doing really well. And a lot of this move up has happened because there's a recognition that they need to use more electricity. But another is every place you can think of this one sort of like wherever there's a Micron trip, there's also a network and there's a switch. And Arista Networks is a company that actually really solid fundamentals and really well positioned, especially to take advantage of this build out that we know is coming with more AI data centers. So I'm putting this on. This has been on my radar for quite a while. I haven't traded it, but Arista, which is Alpha November Echo Charlie ANET, putting this on people's radar. This is certainly a nice looking chart and something that I'm probably going to be trading here in the next few weeks.
Cool.
What else are
Well,
we going to talk about?
where are we eating in Jackson Hole?
I don't know. Jill's got the places picked out for dinner, and I'm going to the rodeo on
It's that same, it's that same place we saw
Harrison Ford.
Harrison Ford last year.
I think it might be.
It might
We
be.
might actually that actually might be where the hotel where the meeting is too, or is it the hotel across? I don't remember. I'm not
But
exactly sure.
either one, it'll be good to see you.
Yeah, good to see you too.
We will we'll have to do a download after the economic event that we're going to. There's a few Fed members will be there, a lot of big economists and some friends that we've made over the years through the this network. So we'll let you guys know. So well, thanks for joining us today, listening to us. Don't forget, if you're new to the channel, if this is the first time you've seen us, don't forget to like and subscribe, share this with your friends. And we'll see you guys.
Yeah, don't tell anybody. Keep it our secret, okay? Shh, this is our secret. But
Yeah.
like and subscribe so you get notifications. And if you want to learn more about what it is that we talk about, Options Animal is the best place for you to learn about trading options strategies. Been around for decades and have a fantastic track record and really can help you from what is a stock, what is a put, what's a call, all the way up. And for those of you that are looking for real practical trade ideas and real time market intelligence, Options Animal recognized the need for this, and we partnered and created Trader Oasis, which is a business that I run. And every day we're sharing trade ideas and real time. There's live sessions where we're going through looking at real trades, and it's not right for everybody, but there are some people who are.
Yes, it is.
Well, it's right for more people than that probably think it's, but there are people who have made so much money, and our goal is to try and make it easier for you. Then the analogy that I use, and maybe we should change our branding. And I was trying to explain this to somebody. What's the difference between the two companies? And I think Trader Oasis is like a Sherpa. Like if you want to go climb Mount Everest, probably not going to go do it on your own, but you are going to have some skills. So hopefully the first time you go on a mountain is not on Everest, or otherwise you'll be one of those casualties. So you develop some skills and some training and some experience with Options Animal, but then having somebody who's going to guide you and give you expertise and take you through, that's what Trader Oasis does. Options Animal is going to help you learn the fundamental skills, but taking those skills and applying them and finding success, that's why Trader Oasis was created. And like I said, we've got our fans, our clients are our hugest fans. They're doing so well and appreciate what we're doing. So a lot of you probably should go ahead and check it out. And if you have interest, just sign up at the website and come check out a class if you're not happy, or check out a membership for a few days. I suggest starting at the advanced membership. And
we need to get our own logos. I'm the little like old guy at the base of the hill that will teach you to go up Everest, and you're the mountain goat.
I'm the goat.
You're the goat that'll help them get to the top.
I am a billy goat. I do. So I could use the analogy for fishing too, right? Or hunting, right? So that you have some basic skills, how to cast a rod, but they're going to tell you where the fish are and how to get there and how to bag the big ones. And we've certainly, this morning, some people were raving about how successful they have been. They are definitely a huge return on investment for these people. And you and I were talking, the price is a bargain if we quadruple the price. It's worth that much. There are competitive products. There are people out there, other companies selling stuff for 4 times as much as we do and don't provide anywhere near the value. So I don't think you'd be disappointed. I wasn't
Thanks,
planning
guys.
on saying that, but we do this for a reason. We like sharing information, but we want to try and grow our businesses too. Thanks, Greg.
Okay, we'll see you next time.
Talk to you later. Bye.